Very good morning. You're watching News 9 Live. I'm Karthik Malhotra and this is Morning Brief at 9. All the top stories from the world of business and economy coming your way in the next 1 hour or so. The top stories that we'll be tracking today and discussing with some very special guests will be India's GDP growth slowed down to 6.4% as per ADVANTA estimates. What does this mean for you, the tax-paying citizen? Also on the show, what did India drive in 2024 and which car overtook Maruti Suzuki? We'll bring you that. We'll also bring you on the show stocks which happen to be in news and should be on your radar this morning. Joining us on the show will be economist Vivek Kumar to decode the GDP numbers. We'll have CS Vigneshwar, the president of FADA, who will tell us all the auto insights, and we'll have Brajesh Ail, who will bring you all the stocks that should be on your radar. This is Morning Brief at 9. This is Morning Brief at 9 and we are bringing you all the top stories in the world of business and economy making headlines today. Let's start with India's GDP growth. India's GDP growth came in. The advanced estimates suggest that India's GDP will grow at a 4-year low of just 6.4% this year, a sharp decline from 8.2% in FY24. We'll deconstruct what this means for you, the citizen of India. Meanwhile, India's fuel demand has hit a 7-month record high in the month of December, 20.67 million metric tons, its highest level since last May as per Oil Ministry data. Rupee meanwhile has recovered from record lows on Tuesday. The rupee climbed 0.1% to record 86 rupees and 71 paisa to the dollar. In other news, Microsoft chief Satya Nadella pledges to invest an additional $3 billion in artificial intelligence and cloud infrastructure, including data centers here in India. Tata Punch has emerged as the best-selling car in 2024. It has overtaken Maruti Suzuki's 40-year hegemony. In other corporate action, Temasek leads the race to buy a 10% stake in Haldiram Snacks, signs the term sheet and emerges as the lead contender. SEBI has issued an administrative warning to Ola Electric and its founder and chairman Bhavish Agarwal for disclosing expansion plans on social media ahead of informing the regulator. And staying with Ola, Sachin Bansal is reportedly likely to sell his $100 million stake in Ola. And after X, it's now the turn of Meta, the parent company of Instagram, Facebook and WhatsApp. Meta has announced that it will discontinue fact-checking on its platform. This is Morning Brief at 9. Those were the headlines. And now let's look at the top story that came yesterday evening and happens to be making headlines in all the papers today, and rightly so. India's GDP growth is estimated to have slowed sharply to 6.4% in FY25. This is down from 8.2% in FY24. Now, as per the National Statistics Office's first advanced estimates, while nominal GDP growth remains stable at 9.7% compared to 9.6% last year. Let's understand what this really means. Nominal GDP growth is GDP growth plus inflation. So the nominal GDP growth coming in as per the advanced estimates at 9.7%, while the real GDP growth continues to be in the slow lane of just 6.4%. It falls short of the 10.5% growth assumption used for FY25 budget. Now, despite this, the government is unlikely to worry about meeting its fiscal deficit target of 4.9% of the GDP due to strong revenue collection and reduced capital expenditure. Now, which are the sectors that did well and which are the sectors that were laggards? First, let's understand why this number of 6.4% when all estimates from the RBI to the Government of India had originally predicted at the start of the year and during the course of the first 6 months that GDP growth in India will be in the range of 6.5% to 7%. RBI in its December announcement had said that GDP growth may slow down to 6.6%, but the numbers that have come in the advance estimates now suggest that the GDP growth is expected to be even slower than RBI's projection of 6.6% down to 6.4%. However, to meet the 6.4%, considering that the Indian economy grew 6.6% in quarter 1 and only 5.4% in quarter 2, averaging out to just 6% of growth for the first half of the year, now entails that cumulatively aggregating for Q3 and Q4, India's GDP will have to grow at 6.8%. So 6.8% aggregate growth for Indian economy for Q3, which is the December ended quarter, and Q4, which is the upcoming March quarter, is going to be the run rate for India to even achieve the 6.4% in growth rate on GDP. Now, what could this mean for you, the consumer, the user, the taxpayer? We have a very special guest joining us. Vivek Kumar, economist at Quantico, joins us this morning. Vivek, good morning. Pleasure having you on Morning Brief at 9 on News 9 Live. We know 6.4% is not something that anybody wanted to see as the advanced GDP growth print for this year. But here we are, 6.4%. Help us understand, what does this mean for the average citizen? I think Vivek is finding it difficult to hear us this morning. Vivek, if you're with me, I wanted to understand from you, 6.4% growth expected this year. What exactly does it mean for consumers? All right, it looks like we have a connection problem with Vivek Kumar this morning, but let's try and understand what this really means. Now, a 6.4%, which is a sharp slowdown from 8.2% the previous year, will indicate a few things. This will indicate that there is going to be perhaps a slowdown in job creation as well. Now, remember, the GDP is calculated on the basis of consumption. It's calculated on the basis of investments made by the government and by the private sector. We know that the government spending and private capex cycle has been slow, and it is also an aggregate of net imports and exports in the country. But 6.4% coming in. Vivek Kumar, I believe, is back with us now. Vivek, 6.4% growth, not great news. What does this mean for consumers? Can we expect fewer jobs to be created?
Thanks for having me on the show. And yes, 6.4% is probably, I would say, in line with market estimates as well as our own internal forecast. It's a tad lower than the RBI's estimate of 6.6%. And marginally lower than the lower end of the government's own estimate of 6.5-7% band. So, in a nutshell, I think the broader message here is that this is going to be a year of two halves. If you break the, I know it kind of sounds a little bit cliched, but you have a data for the first half of the year. The average growth in the first half of the financial year is at 6%. So, which essentially means that, this is the first advance estimate, the implied growth rate for the second half of the financial year is going to be at 6.7%. So, if one has to take a view from a first half, second half perspective, then one could probably take solace from the fact that second half incrementally the momentum is going to pick up. So 6% in first half will turn into 6.7% in the second half. On an aggregate basis, you will end up close to 6.4%. So that's the broad message. The Other message here is that, if you break all these subcomponents of GDP and look at where the increments are going to come from in the second half of the financial year, the increments are largely going to come from government consumption, followed by private consumption demand, and to some extent exports. Surprisingly, there was an expectation that the second half of the financial year, the public spending on capex is going to improve as the government makes an attempt to meet its budgeted target. But that's not showing up in NSO's or the ministry's estimate of the GDP. The first half, second half divide between capex or investments is absolutely flat at 6.4%. So there is no acceleration in second half capex growth, which the NSO has assumed. So this is somewhat puzzling. This is also somewhat, I think, not very comforting, because it kind of then signals that the anticipated recovery that one was hoping for from the private sector in terms of investment, in terms of capex, is probably not going to show up even in the second half of the financial year. And I think, to me, that is the most disappointing aspect of the
Vivek,
GDP
I want to understand
growth.
from you, if we don't see government capex spending increasing, which means infrastructure and all the other investments that the government would have otherwise made for us to be in the fast lane of economic growth is not going to come, then where is this growth of an aggregate 6.7% in H2 going to come from? We know that consumption has also been faltering. It's not the brightest story to write home about.
Well, so consumption has actually two shades here, Karthik, I would say. So one is the fact that there is a perceptible degree of moderation, or in fact loss of momentum, in case of urban demand. And that is something which is also engineered to some extent from a policy perspective. So all the tightening that we've seen in the last 2 years is now showing up in the form of slowing down of urban consumption. And that tightening has happened through various routes. Monetary policy has tightened, interest rates have gone up, the credit market conditions have tightened. Some of it, again, has been regulatory in nature. Fiscal policy has tightened. So all the cumulative impact of all this tightening, and last but not the least is, the moderation in wealth effect also is now showing up, especially in the current financial year, is showing up as a loss of momentum in urban consumption demand. On the flip side, the rural demand is showing signs of recovery. There are enough evidence of state governments, and in fact, even central government now to a very small extent, going up, in fact, increasing their revenue expenditure. And a lot of state governments in the last 2 years, they are handing out cash in terms of their development spending, in terms of their welfare spending, and that, to our sense, is now starting to show up in case of rural demand. It is also getting reflected in some of the proxy indicators like, two-wheeler sales, tractor sales. Some of the FMCG companies which have reported their earnings, they are showing this stark divide between urban demand and rural demand in terms of their volume growth. So consumption is not all out blanket story. It's a two-speed recovery which is happening. One leg is slowing down, the other leg is holding up well, in fact showing signs of improvement. And the expectation that the Kharif output is now hitting the market, and Rabi sowing is progressing relatively at a satisfactory level. So all this put together will also start to support rural demand in the coming quarters. So from that perspective, we would be actually slightly optimistic on the incremental difference between private consumption demand as a whole. And the second half of the year, with all the agri good news coming into the picture, the incremental pictures on total private consumption demand should start looking up.
You were talking about the monetary tightening, and we have been in a tight monetary policy spot for many years now, Vivek. And I want to understand, what does that mean for the capex cycle of the private sector to kick in? Because unless that happens, jobs are not going to come by. And if you remember, the focus of the government in last year's budget was also jobs, jobs and jobs. Unfortunately, we haven't seen the kind of job creation that we wanted to see. So a tight monetary policy coupled with a slowdown in growth, what does this mean for people who are in any case dealing with inflationary pressure, whether it is chicken prices going up 20% or whether it is auto prices never reducing? So overall, what does this really mean for consumers? How long before the job market opens up? How long before the inflation story softens, and how long before there is some money available in the hands of the people outside of the sops that the government gives to the underprivileged section of society before the India story begins to shine again?
Yes, it's a valid question, and what we think is that probably the sensitivity of interest rates to capex, especially private capex, is not that high in a country like India, especially considering the fact that monetary policy is not as tight as how it was in the previous regimes. So during the pre-Lehman crisis episodes, the real interest rates in India, as far as benchmarked against the policy repo rate, was positive to the extent of 3 to 4%. Currently, our real interest rates are somewhere close to 2% positive, and so which essentially means that we are lower vis-a-vis our heydays on GDP growth that we saw, and heydays on private investments that we saw in our earlier episode. So that tells us that interest rates, while yes, they do play a role, they are not probably a binding factor for making capex decisions. What is much more important is the policy environment, the certainty of policy environment, both domestic as well as global. And in this context, I think we have reasons to worry, because last 2 years, we have not only seen an adverse spike in geopolitical uncertainty, we are now also entering a very different geo-economic world order, especially with respect to world trade. And when investments are being planned, this sort of uncertainty is something which probably has a much larger bearing than the immediate cost of interest rates. Last, I would say, but not the least, is the fact that I think that's probably all about it. It sums up the argument that interest rates are less sensitive to capex than probably policy environment and policy certainty.
All right, let's leave it at that. Vivek Kumar, economist, Quantico, thank you so much for joining us this morning. Well, moving on now, in another big development, Microsoft CEO Satya Nadella yesterday announced plans to invest an additional $3 billion in cloud and AI infrastructure in India over the next 2 years. The investment will support the creation of new data centers, with a fourth region expected to go live by 2026. Now, as part of this, Microsoft will also expand its AI skilling initiatives, aiming to train 10 million or 1 crore Indians in AI over the next 5 years through the ADVANTA initiative. Now, in all of this, it is part of the Global Skills for Social Impact Charter of Microsoft, with a focus on collaboration with governments, non-profits, as well as business houses. The company has already exceeded its target by training 2.4 million people in AI, 65% of whom were women, and 74% of the participants came from Tier 2 and Tier 3 cities. Microsoft's continued investment in AI will also support the upskilling of 150,000 startup employees in collaboration with SaaS Boomi, and help attract $1.5 billion in venture capital. Other initiatives include the AI Innovation Network, which aims to convert research into business solutions, as well as partnerships with companies like a startup PhysicsWala to create AI-driven tools for education. Well, with that, it's time for a quick break. But on the other side of the break, we will bring you stocks in news today and what your trading strategy should be, as well as a big story on the cars that India drove in 2024 and what that means for the trend in 2025. All this and more on the other side of the break.
You dreamt of European engineering, of modern design, of craft that's comfortable. With the best-in-class maintenance cost, we made your dreams a reality. Behold, the Škoda Kailac.
Škoda.
पियो ग्लास फुल दूध 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 है वंडरफुल पी सकते हैं रोज ग्लास फुल दूध 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 गर्मी में डालो दूध में आइस दूध बन गया वेरी नाइस पियो डेली वंस और ट्वाइस मिल जाएगा टेस्टी सरप्राइज वंडरफुल दूध पियो ग्लास फुल दूध है मस्त इन एवरी सीजन पियो दूध फॉर हेल्दी रीजन रहोगे फिर फिट एंड फाइन जियोगे पास 99 दूध 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 चारों ओर मच गया शोर गिव मी मोर वंडरफुल दूध पियो ग्लास फुल दूध
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
Welcome back. You're watching Morning Brief at 9, and in this segment, let's bring you all the action from the world of stock markets. Markets have opened just a few minutes ago, and not a great open for Indian equity markets today. The Sensex, Nifty both down, not too much, almost a flat opening, but a negative flat is something I would say. We saw a bit of a recovery yesterday, but that doesn't seem to be the mood of the market this morning. Even the broader market seem to be down. Nifty mid cap is down about 0.5 percentage point, and Nifty small cap is down about 1/3 of a percentage point. Even the volatility has increased, albeit just a little bit, 0.08% up. Let's look at the Nifty 50 hotboard and see how the heat map tells us the picture of companies which have opened in the green and those which are in the red. Well, we've seen a mixed bag coming in. Look at the auto sector, Maruti Suzuki, Mahindra and Mahindra. Remember, auto data came out yesterday. We are just days away from the Mobility Expo as well. Electric vehicles saw a 20% increase in sales last year. Maruti Suzuki has announced its own plan to launch the e-Vitara this year. Perhaps the markets are taking that news well. Maruti is up about 0.31%. Even Mahindra and Mahindra has announced its plans for electric vehicles as well as the prices of some of its electric vehicles yesterday. So Mahindra stock, Maruti stock are doing well this morning. A mixed bag coming in from the banking sector. HDFC Bank is down about 0.6%. ICICI Bank, on the other hand, is slightly up this morning. Reliance Industries is up about a percentage point or so. Let's look at all the stocks which are in news today, and let's understand why these stocks are making headlines today. Let's begin first with Ola Electric. Ola Electric is a stock in news today. Ola Electric is in hot water with the market regulator SEBI, after SEBI issued an administrative warning for revealing its expansion plans on social media before informing the stock exchanges. Plus, the Karnataka High Court has given the company 6 more weeks to respond to the Consumer Protection Authority's query. Let's move on to another stock which is in news today. These, of course, are visuals of Ola Electric, but let's move on to Reliance Industries. Well, Reliance Industries, big calls on Reliance because Bernstein has given the stock an outperform rating with a 1,520 rupee price target, citing a recovery in Jio's average revenue per user or ARPU, plus retail growth and refining margins. Jefferies is even more bullish with a 1,690 target on Reliance, expecting better retail earnings and Jio's potential listing. Let's look at the price chart this morning for Reliance Industries. On a year-to-date basis, Reliance is up about 3% or so, but just this morning in trade, we told you it opened well. Well, it is continuing to hold. It is up almost a percentage point, up about 0.97%, trading right now in the range of about 1,250 rupees or so. Let's move on to another stock which is in the news today, and this one comes by way of Bharti Airtel. Now, Bharti Airtel, HSBC, has a buy call on this stock with a 1940 rupee price target, predicting a 114% dividend rise in FY25 as free cash flows improve. They expect dividends to quadruple to by FY27, driven by growing mobile ARPU, broadband subscribers and free cash flows. We have Brijesh Ail joining us this morning. Brijesh, let's start with Reliance Industries this morning. Is Reliance Industries a stock which is on your radar, especially after it gets not just a buy rating but also improved price targets from both Bernstein as well as Jefferies?
Yeah, hi, morning. So what we can, with respect to Reliance, what we can see that there has been a very decent correction, and eventually the level of this 200 is a very strong demand zone from the technical point of view. So my understanding is that there is slowly some buying is happening, but then still, if you ask me, the trend for the Reliance is still down. Maybe fundamentally, people might feel there is a buy kind of a structure, but then technically 1270, 1275 is the 50-day moving average where it might take some resistance. And lately, when there was a sell-off, the level of 1330 was the level from where the selling has started. So we can talk of the bounce. So maybe we can speak of another 50 odd points kind of a bounce from the technical point of view. From 1250, it may go towards 1300. So this looks more of a trading bet for me as of now. But maybe in the near future, if things improve and 1330, 1350 is taken out and we have very strong closing from the weekly and monthly perspective, then we might change a view. But then from the current point of view, we can talk of another 50 points as a trading opportunity. And the recent low of 1200 would be the stop loss for the same.
Now to Mahindra and Mahindra. M&M has come out with pricing of its top variants of the BE6 and XEV 9e at 27 lakh rupees and 30.5 lakh rupees respectively. Test drives will start on Jan 14th and bookings will open on Feb 14th. We've seen the Mahindra and Mahindra stock is in the green this morning, up about half a percentage point or so, if I remember correctly. Brijesh, what should traders do from this news item of the pricing of its new EV entrants being announced?
M&M, the directional trend for the M&M is quite positive, and we are like, whenever it comes closest to 2900, 2800, we are one of those low. We keep recommending the buy trade setup. Lately, when in the last 3 days, when there was market correcting, it has come back to the support level. This 3100 is the immediate support zone. I think we should take this opportunity to take the fresh longs, and in the near term, we can talk of 3400, 3450. That's a directional view. But definitely this 3,100, or maybe if something goes wrong, 3,000 would be the maximum correction for the M&M. And we should use this opportunity to take the long bets. I think there will be a good amount of bounce in this stock.
Good amount of bounce expected in M&M. Let's talk about M&M's competitor Maruti Suzuki this morning. Brijesh, Maruti Suzuki also has announced the launch of its first electric foray with the e-Vitara, and visuals of those were coming in this morning. What is your call on Maruti Suzuki?
Technically, 12,100 is the level where 200-day moving average is there. So, from a technical perspective, this would act as a resistance. In the last few days, there was a rally. So by any chance, if maybe this week or maybe in the coming week, we sustain about 12,000 level, then I believe the structure from the monthly point of view is extremely positive. Then the fresh buying can be seen in the Maruti, and we are extremely positive from the long-term perspective. So 14,000, 14,500 is the directional view for the Maruti. On an immediate basis, 12,000, 12,100 would be a small resistance. Once this level is taken out, then I think one can be a little bit more aggressive there, Maruti. The view remains extremely bullish.
All right, view remains bullish on Maruti Suzuki as well. Let's move on to one final stock this morning, and this is Berger Paints. Berger Paints is reportedly eyeing AkzoNobel's India business, with the latter looking to sell its 74.6% stake. The deal could be worth 10,000 to 12,000 crore rupees, potentially structured as a cash or hybrid transaction. Berger Paints, is this a stock on your radar this morning, Brijesh?
What I can see is these levels of 450 for the Berger Paints a multiple demand zone. Since 2022, this level has been acting as a very strong base. So right now it's back to this demand zone. Some bounce can be expected from, but then directionally we are avoiding Berger, Asian Paints, this kind of stocks. Maybe we don't see that much potential on the higher side. This can be more of a trading opportunity, but not from the positional point of view.
Well, all right, let's leave it at that. Brijesh, let's leave it at that this morning. Thank you so much for taking time out and running us with your thoughts on these stocks which were in news today. We'll have you back on Morning Brief at 9 soon. And moving on now, interesting consumer story that came in by way of automobile data on sales of brands that you love coming out yesterday. And the data suggests that after a 4-decade hegemony, it is not Maruti Suzuki or any vehicle of Maruti Suzuki which topped the ranks, but it was another brand and another vehicle. Well, let's look at the data first. Retail sales overall saw a 9% year-on-year growth in 2024, and this was boosted by strong demand for two-wheelers as well as passenger vehicles, and this according to FADA. Total vehicle registrations reached 2.61 crore units, up from 2.39 crore rupees 2.39 crore vehicles in 2023. Passenger vehicles meanwhile rose by about 5% to 40.7 lakh units, and this was spurred by network expansion and new launches through margin pressures and a discount war emerging in the later half due to high inventory. Now, look at the graph on your screens right now. The cars that sold well in 2023 no longer making the cut in 2024. In 2023, the top selling vehicle was the Maruti Suzuki Swift, which is no longer in the top 5 list in 2024. And 2024 sees a non-Maruti Suzuki vehicle right at the top, which is Tata Punch, selling 2,02,029 units. Next up was Maruti's WagonR with 1,91,000 odd units, followed by the Maruti Ertiga with a similar count. Closely behind Maruti Brezza, and then there was the Hyundai Creta. Let's understand this trend with a very special guest joining us this morning, CS Vigneshwar, President FADA, joining us on Morning Brief at 9. Mr. Vigneshwar, a very, very different trend emerging in 2024. It is not a Maruti Suzuki car on top, but it is indeed Tata Punch, which was not even in the top 5 last year.
I guess with a very competitive market, these things are bound to happen, because it's, I think number one, as a position in a competitive market is never to be taken for granted. There are excellent products which are coming out of many OEMs, and the competition is high, and it's good that there's a change, because I'm sure Maruti and Tata, they are wonderful car manufacturers. They would do the best to, again, either one would try to hang on to the first position, the other one would try to beat them to it.
But according to you, Mr. Vigneshwar, what changed between 2023 and 2024? We had the Maruti Swift as the highest selling vehicle in 2023, and it's not even in the top 5 in 2024. Is this the urge of every Indian to want to own an SUV? And if an SUV is not something they can afford, then at least something that looks like an SUV. Is SUV the flavor of 2024?
SUVization, if I can call it that way, has been happening not only in India but throughout the world. More and more SUVs seem to be replacing hatchbacks and sedans, and it's very pertinent as a factor, which is also in the Indian scheme of things. Couple of things. Number one, the SUV seems to give a better road presence from the outside. So there's a lot of, the ego satisfaction also is very high. From the inside, your visibility, road visibility is high. Also, there's an advantage regarding, the ground clearance. Certain Indian cities in certain parts of India, which is very important. The road clearance is very important. And also there's a perceived sense of safety. I can assure you that with NCAP ratings and all that, even sedans and hatchbacks are equally safe.
Right.
But there's also a deep sense of safety when there's a larger vehicle in your doorstep.
All right. I want to bring your notice now to one more interesting statistic, and this is coming with the number of electric vehicles sold in the year 2024. And that has seen a jump of about 20% or so. So is it right to say that we are now pretty much at the tipping point where more and more electric vehicles are going to be mainstreamed on Indian roads? Or do you think, Mr. Vigneshwar, we are still a far distance away from achieving that milestone of 30% of India's fleet to be electric by 2030?
Karthik, this 30% by 2030 is going to be a hard sell. It's not that it is not achievable, but you're right, it has gone up by 20%, but 20% hike would be very small and minuscule in terms of the market share. So in 2023, the EV market share for passenger vehicles was 2.5%, and this the past year in 2024, it has gone to 3%. So it's not a huge increase, but you would actually see an accelerated pace. Because of in 2023, you probably had a couple of vehicles or 2 or 3 vehicles. Last year, we had a handful. But this year, we're going to have a lot of vehicles being introduced by every manufacturer. Every manufacturer who's serious about India, who has a large presence in India, or who have great plans for India, is going to get into the electric bandwagon. But EV is just one part of the story. We also need to consider other alternative fuels like CNG, hybrids. So all these things would work together to reduce India's fuel needs, and it would really help in reducing the import of fossil fuels.
All right. Well, I understand that, it might be a difficult question for you to answer, with great degree of accuracy at this moment. But I still want to ask you that Maruti Suzuki has also now finally announced its very hard foray into the electric market with the launch of the e-Vitara. Now, if you look at the graphics that we were just playing a few minutes back, you have a large gap between the number 2 and the number 3 players. So you have Tata Motors right at the top, and then you have Mahindra and Mahindra. But then the gap between the number 2 and the number 3 is fairly large. So do you think with Maruti Suzuki now announcing its decision to come full on into the EV space, we will now see this rise in EVs, not just as a percentage, but also as a volume growth in 2025?
It will happen because from what I read, there are more than 20 models which are going to be introduced at the auto show. And the auto show usually is a very interesting time for the auto industry because it really shows the mood of the OEMs to take the risk of introducing products. And also it shows the mood of the customers to be willing to go and buy a different product. And here in this case, EVs, although they're quite nascent in India, they have a great future because the government, the OEMs and everyone are actually driving forward to have less fossil fuels, therefore reducing our foreign exchange depletion and also to make sure that the environment is a lot more clearer. So yes, it's going to be a good race. I don't know whether we're going to hit 30% by 2030. I hope we do. But I think the EVs are going to play a much larger game in the Indian system, automotive system. And yes, Maruti being Maruti, they have their network presence everywhere. So I think it would be a good product to wait for them, to wait for the product, the e-Vitara. And wishing them the best. And hopefully a lot of manufacturers come on to the EV bandwagon.
All right, let's leave it at that. Mr. Vigneshwar, thank you so much for taking time out and joining us here on News9 Live. Well, let's now move on to another interesting segment that we recently launched, and we call this News in Numbers. What are the key numbers or statistics that should be top of your mind and on your fingertips this morning? Well, the news in numbers are number 1, 6.4%. 6.4% is India's estimated GDP growth for the current financial year FY25. So 6.4% is a number in news today, which should be on top of your mind. Next up, we've got another number, and a big number. This number is $3 billion. $3 billion is Microsoft's India investments. That is the additional amount of investments that Satya Nadella has pledged, which will be made in India in AI, in cloud infrastructure, and in building data centers, as well as training Indians to use AI. Well, another number which should be on your radar today is 2,02,029. That's right, 2,02,029 is the number of Tata Punch cars sold in India in the year 2024, the calendar year 2024. So that is a number which is in the news today, and you should look at that number and remember that to use in conversations that you have about the auto sector today. Another number in news today is 20%. What is 20%? 20% has been the percentage growth in electric cars sold in India in the year 2024. So 20% is the growth. Remember, this growth comes on a small base, so cumulatively it does not really add to large volumes, but a growth, a double digit twice over 20% is a number that you should know of today. Another number, and this one coming internationally, is 2.4%. 2.4% is the inflation data for the month of December in the Eurozone. So these are the numbers in news. Remember to know them and use them. Before we head into a break, let's now look at the global stories making news today. Donald Trump declines to rule out military or economic action in pursuit of Panama Canal control and Greenland acquisition, citing national security. The United States opens investigation into 2.6 million Tesla vehicles over crashes linked to the remote driving feature. After X, it's now Meta, which has ended its fact-checking program in the US, replacing it with what it calls community notes, similar to X, allowing users to flag misleading posts. Meanwhile, US stocks tumble as strong economic data raises concerns over inflation, pushing back expectations for the Fed Reserve to cut rates this year. Eurozone inflation rises to 2.4% in December, driven by higher energy and services costs, but unlikely to derail European Central Bank's plans for further interest rate cuts. And soaring electricity costs in Greece put pressure on businesses, with Southeast Europe facing steep energy price hikes amid ongoing supply disruptions. After 9 years in office, Justin Trudeau has announced his plans to resign as Prime Minister amid declining popularity over rising costs and housing crisis. CES, the Consumer Electronics Show 2025, kicks off with NVIDIA's AI innovations for robotics, gaming and self-driving cars amid looming tariffs and uncertainty. And meanwhile, at CES 2025, Japanese electronics major Sony has revealed a Fila 1 electric vehicle starting at $89,900 with advanced features and connectivity options. These stories and more on the other side of Morning Brief at 9.
Unlimit love. B6 Mahindra Electric Origin SUVs.
Bonjour, madam.
आज बड़े फ्रेंच बन रहे हो? हाँ?
याद है 10 साल पहले मैंने कहा था I will take you to Paris.
पेरिस नहीं, पैरी। तुम्हारा प्रोनाउंसिएशन भी ना तुम्हारे इरादे की तरह।
मैडम, इरादे कभी ऑफ नहीं होते हैं। टेक ऑफ करते हैं।
SBI Life Smart Platina Supreme के guaranteed return से करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI Life, अपने लिए, अपनों के लिए।
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
Welcome back. You're watching Morning Brief at 9. On to global stories and news today. In a major development, Meta announced that it will be ending its fact-checking program in the US and replacing it with a new system similar to what X did, called Community Notes. This move aims to empower users to provide more direct feedback and annotations on content. Take a look.
Meta is ending its fact-checking program in the US. The Facebook owner said Tuesday it will replace it with a Community Notes system. That's similar to what is seen on Elon Musk-owned X. The Community Notes model will allow users on Meta's social media sites to call out posts that are potentially misleading and need more context. It removes the responsibility of independent fact-checking organisations and experts. Meta claimed experts, like everyone else, have their own biases and perspectives. It further said this showed up in the choices that some made about what to fact-check, and that a program intended to inform too often became a tool to censor. Meta said its efforts over the years to manage content across its platforms have expanded to the point where they are making too many mistakes. They believe it frustrates their users and too often gets in the way of free expression. The company said it would begin phasing in Community Notes in the US over the next couple of months. It said it aims to improve the model over the course of the year. It will also stop demoting fact-checked content and use a label notifying users there is additional information related to the post.
Meanwhile, the US National Highway Traffic Safety Administration has launched an investigation into 2.6 million Tesla vehicles in the US. The probe follows reports of crashes linked to the Smart Summon feature in Tesla vehicles. Take a look.
The U.S. has opened an investigation into 2.6 million Tesla vehicles over reports of crashes involving a remote driving feature called Actually Smart Summon. The feature, which was launched in September, allows users to remotely summon their vehicle towards them or another location using a smartphone application. The National Highway Traffic Safety Administration, which opened the probe, said it had reports of Tesla vehicles failing to detect posts or other parked vehicles when operating under the feature. The agency added that users had, quote, too little reaction time to avoid a crash by releasing the app button, which stops the vehicle's movement. At least 4 crashes were reported. The new probe comes after a separate investigation by the same agency into 2.4 million Tesla vehicles equipped with full self-driving software after 4 reported collisions, including a fatal 2023 crash. Tesla CEO Elon Musk, a close advisor to President-elect Donald Trump, has previously criticized actions taken by the National Highway Traffic Safety Administration. Shares of Tesla were down 3% in Tuesday morning trading.
Staying with the US and on to a political story, US President-elect Donald Trump has refused to rule out using military or economic measures to acquire the Panama Canal and Greenland. Speaking at an event, Trump hinted at the moves as part of a broader expansionist agenda he has been promoting since his election victory on November 5th. More in this report.
I'm not going to commit to that.
U.S. President-elect Donald Trump on Tuesday declined to rule out military or economic action as part of his desire to have the U.S. take back control of the Panama Canal and acquire the Danish territory of Greenland.
No, I can't assure you on either of those two, but I can say this. We need them for economic security.
The extraordinary statement came as Trump further outlined an expansionist agenda, 2 weeks before he is sworn into office on January 20th in Washington.
Well, we need Greenland for national security purposes. I've been told that for a long time, long before I even ran.
Trump suggested he would impose tariffs on Denmark if it resists his offer to purchase Greenland, which he said is vital to U.S. national security. Denmark has said Greenland is not for sale. Aya Chemnitz is a Greenlandic member of the Danish parliament.
It's a question of whether should we maybe collaborate a bit more with the US. We shouldn't be bought by anyone because Greenland is not for sale and Greenland will not be for sale, but we can have a closer collaboration on business development with the US.
Her comments come as Trump's eldest son, Donald Jr., on Tuesday, arrived in Greenland's capital Nuuk on a private visit. When it comes to Panama, its president, Jose Raul Molino, has previously rejected the notion of turning the canal back to the U.S., which had owned it before handing over control to Panama in 1999.
We gave the Panama Canal to Panama. We didn't give it to China. And they've abused it. They've abused that gift. It should have never been made, by the way. Giving the Panama Canal is why Jimmy Carter lost the election, in my opinion, more so maybe than the hostages.
The press conference, Trump's second since he won the November 5th election, took place one day after Congress formally certified his victory.
Nobody's ever won so many cases as I have.
Meanwhile, on the same day, a New York appellate court denied Trump's bid to halt the sentencing Friday for his conviction stemming from hush money paid to a porn star. Also on Tuesday, a judge in a separate case temporarily blocked special counsel Jack Smith from releasing a report on his investigations into Trump for his mishandling of classified documents and attempts to overturn the 2020 presidential election.
The Consumer Electronics Show 2025 in Las Vegas kicks off with NVIDIA's Jensen Huang making headlines again, from innovations in robotics, gaming and to self-driving cars. Take a look at what CES 2025 has on offer.
Top names in tech are gathering in Las Vegas for one of the industry's biggest events. The CES trade show brings together manufacturers, suppliers and analysts from across the technology world. This year it kicked off with a keynote speech from NVIDIA boss Jensen Huang. He unveiled a new system for training robots and self-driving cars at a much lower cost.
The ChatGPT moment for general robotics is just around the corner.
Huang also revealed new chips designed to give video games movie-like graphics. They also feature AI technology that will help game developers create more realistic human faces. But the Tech Fest takes place this year under a looming shadow. In less than 2 weeks, Donald Trump will be sworn in as president, and he's promised sweeping tariffs on imports, particularly from China. Gary Shapiro is head of the Consumer Technology Association, the CES show organizer. He says protectionism doesn't help anyone.
It hurts American companies, it hurts the American stock market, it hurts the retirement plans, the 401ks, the IRAs, and I know President Trump cares about all of that. So while tariffs are a negotiating tool for him, and we'll have some difficult, even terrorizing moments for the business community and American consumers, I think ultimately President Trump will do the right thing.
However, Trump this week denied reports that he could scale back tariff plans, calling it more fake news. That's sure to see the firms gathered in Las Vegas asked whether they plan to change suppliers or move production. Trump has also vowed to end government support for sales of electric vehicles, nowadays a big focus for the tech sector. Updates on self-driving systems are expected at the show from firms including Toyota. In his keynote address, Huang said the Japanese auto giant would be buying chips from his firm to power driver assistance features. AI is also likely to remain a buzzword at the event, with the tech set to power everything from companion robots to immersive VR headsets. The CES show will run until January 10th.
And staying with the CES 2025, Sony has made a big splash unveiling its much anticipated Afeela A1 electric vehicle. The car, which marks Sony's official entry into the competitive EV market, is now available for reservations starting at a sweet $90,000. Take a look.
A new entrant into the competitive world of electric vehicles drove into view on Monday. Japanese tech giant Sony revealed its Afeela 1 is now available for pre-order at a starting price of $89,900. Hiroki Totoki is president and CFO of Sony and spoke at the CES Technology Trade Show in Las Vegas.
At last, Afeela 1 is ready for reservation. This product will be offered at the starting price of $89,900 for the origin trim and $102,900 for the signature trim.
The Afeela 1 is Sony's first EV and developed in partnership with Japanese automaker Honda. It first unveiled a prototype of the vehicle at the same event 2 years ago. Sony executives said Monday both versions of the car come with a 3-year complimentary subscription and features. That also includes a driver assistance system. Sony's long-awaited push into EVs shows how manufacturers are focused on the cockpit experience in cars. It offers the potential to sell content via subscription services, especially as autonomous driving capabilities improve.
Our next wave of competition in EV emerging. With that, it's a wrap on Morning Brief at 9. Thank you so much for joining in, but stay tuned to News 9 Live and news and updates continue right here.